Before we go any further, please keep in mind that we're giving away $100 to a random subscriber. All you have to do is like the video, subscribe, and leave a comment on your favorite cryptocurrency. Read our description for more info about it. Now let's get started with today's video. So, let's take a look at the whales first. This whale sold 200 million Doge today, and this one sold another 100 million. Then there's this one that sold 100 million. Now, I know that there are more reasons for the market crash that we're seeing right now, and these 3-4 whales don't have the power to move the market like that. But the point is that there are a lot of whales that are selling in relatively smaller quantities, and this is creating a lot of fear in the market. And this fear is driving the retail investors out of the market. Now let's take a look at where we stand right now. So, Dogecoin is now down to 23 cents, Bitcoin is down to $33,000, and Ethereum is down to around $2,000. Now, as I said, there are other reasons apart from this sell-off that caused the plunge. So, let's take a look at them. Earlier this week, Goldman Sachs said that they don't believe that cryptocurrencies are a long-term store of value or an investable asset class. But only a few days later, it was announced that they are partnering with Galaxy Digital. Basically, Galaxy Digital will act as a liquidity provider of Bitcoin futures for Goldman Sachs. Now, this looks like bullish news to me. This basically indicates that they're thinking that cryptocurrencies are worth looking into and might even rise in prices in the near future. So what's happening is that the large institutions are accumulating right now after creating fear in the market. Let's take a look at this article. Small and medium whales have been accumulating even after Bitcoin dropped below 36,000. But because of all the bearish news, the retail investors are getting out of the market. And there's a fascinating statistic that proves that too. Look at this. Bitcoin fund holdings hit 4-month low. It talks about how holdings have declined by over 15,000 in the past 3 days alone. Basically, this data shows the number of coins held by the US and Canadian closed-ended funds and Canadian and European exchange-traded funds. It's an important set of data because it is considered as a significant sample of network demand. So, the point is that there's fear in the market and retail investors are selling out. They aren't holding and the big institutions are accumulating. Now, let's talk about the biggest mistake that these retail investors are making right now. Look at this. This article talks about how 65% of Americans make the same mistake when it comes to cryptocurrencies. It says that most buyers are looking at cryptocurrencies as short-term investments. The best investing strategy is to hold for the long haul. It then talks about an incredibly important example. It says that Bitcoin turned $10,000 of investment into $670,000 in just 5 years. Now you would have made some money if you'd bought and sold in 2016 itself. But then it would have been nothing compared to your returns if you had held on to it for 5 years. Now, of course, there's no guarantee that you'll get a positive return by your long-term investing strategy. But still, history proves that it's a little better to hold during these times of consolidation. Now let's talk about some bullish signs for crypto that people are totally neglecting right now. Before I move forward, I'd like to remind you that I'm not a financial advisor and this is not financial advice. So you should do proper research before investing into cryptocurrencies. Now let's take a look at them. So, a lot of companies that offer crypto-related products have gotten billions of dollars of funding this year. I talked about it in the previous video, but it's still worth mentioning because this shows that the institutional investors are bullish on crypto. So, take a look at this. During the Series B funding round at the end of January, DYDX raised $10 million. And in June, they raised another $65 million in a Series C funding round. Right now, DYDX has a TVL of around $188 million and holds the 28th position among other dominant DeFi platforms. Another one is the South African cryptocurrency investment platform called Revix. It recently raised $4 million in funding to help it launch a mobile app and expand to the European Union. Then there's Block.one, which received around $10 billion in funding recently. And there's Amber Group, which recently raised $100 million. They sell products related to institutional investors and wealthy individuals. They also announced that they are on track to book revenue of $500 million by the end of this year and have been profitable since they began operations. I hope you get the idea with all this information and statistics that are coming out every day. Now, let's get back to some other reasons that led to the Dogecoin crash this week. This article talks about how the dropping hash rate in China was one of the biggest reasons behind the crash. It then talks about the death cross, which occurs when the 50-day moving average drops below the 200-day, which happened this week. And then another reason was the abrupt fall of the Titan token. If you don't know, Titan is a stablecoin that fell to less than $1 from around $60 in a single day. This fall raised the pressure of regulators to deliver more protections for the public. Even Mark Cuban came out and said that stablecoins should be regulated. And this news of potential regulation sent some retail investors out of the market. What we've seen with cryptocurrencies in the last 24 hours has been pretty harsh. This week's general trend is downward, and this isn't what we're looking for. And realistically, I believe Dogecoin may go to as low as 20 cents. That is where Dogecoin was in April, if you remember. But keep in mind that it climbed sharply immediately after that. So I believe we will see some type of comeback sometime soon. Now, let's talk a little more about price predictions. Antony Trenchev, the co-founder of Nixo, said that the price of Bitcoin will reach $100,000. He feels it is inevitable as crypto usage grows on a global scale. Many African countries, for example, have begun to regulate and embrace crypto assets. El Salvador, in particular, plans to mine Bitcoin using the power of its volcanoes. Furthermore, the nation has placed a large order for Bitcoin ATM. Similarly, Texas will begin installing cryptocurrency ATM at its food shops. This, in turn, will aid in the growth of the cryptocurrency. According to him, Bitcoin has benefited immensely from loose monetary authority. In fact, several cryptocurrency specialists agree with him and predict that Bitcoin may reach $100,000. According to the creator of Plan B, Bitcoin is still on track to reach $135,000 by the end of 2021, and that's his worst-case scenario. However, he predicts it will continue to trade below its all-time high of $65,000 until October. Then there's the CEO of Grayscale Investments, who's also really bullish on crypto. He said that digital currencies have reached an inflection point. Investor demand has never been higher, and every day we're seeing new entrants to what has surely become a bona fide asset class. Now, I'd love to know what you think is going to happen to cryptocurrencies like Dogecoin this week. Do you think they'll continue to fall? Comment below. And with that, we've come to the end of this video. Thanks for watching till the end. If you enjoyed it, please consider liking and sharing it with your friends.